And what BIS does is sort of like highlight risk more than we highlight what's going well. So maybe I will highlight more of the risks, but it doesn't mean that the situation is particularly bleak. So, like last year, we had a very forgiving global liquidity environment, and Ukraine, just as other emerging markets, enjoyed very easy funding conditions, and it placed a 15-year bond. Also, beginning of this year, investors were quite overweight Ukraine. The currency was one of the best performing currencies in the first half of the year. I think hryvnia appreciated something like 7%, maybe more. And that was kind of a general theme for actually most emerging markets. But since a few months ago, it was obvious the situation has changed. The Goldilocks is sort of, that environment has come to an end. And maybe some of the complacency that had set in among some in the political circles in Ukraine that these easy funding conditions are going to continue for a long time, and we can maybe even avoid relying on IMF. That is gone now, and we're back, looks like, cooperating with the IMF. And that is actually a positive development of what has happened. But it's going to be challenging going forward because the risks for emerging market funding are skewed to the downside. I mean, you have US monetary policy tightening. You also have US fiscal expansion in such a late cycle of monetary policy, which also de facto raised short-term interest rates in the US and further tightened funding conditions globally. You have this bizarre situation where, on the one hand, we have oil prices rising, but then we also had US dollar strengthening. Again, that presents a challenge for emerging markets dependent on external funding. Finally, trade and political uncertainty doesn't help emerging markets and Ukraine as well. So maybe I just say one more thing specific to Ukraine. In terms of external funding, most other emerging markets by now are kind of moved beyond original sin, and the governments have been able to issue local currency bonds and place it with international investors. So far, Ukrainian government relies primarily on foreign currency debt, and a lot of it is short term. And at the moment, short-term funding has been secured from the IMF. Also, as a fallback option, Ukrainian banking system itself has quite a bit of FX deposits interbank, and those can be invested in Ukrainian government paper to keep rolling over the short-term debt. But over a longer run, the focus must be on the kind of changes that will bring in stable long-term funding, FDI, foreign currency capital inflows, and that brings us back to really bringing your house in order. Ukraine must proceed with land reform, privatization, agricultural reform, and this then means that even though external funding is a very important source, what will bring stable external funding is bringing one's house in order. In addition to that, it's very important to have solid domestic macroeconomic institutions, develop domestic financial markets, and domestic regulatory environment. I mean, these are not my original thoughts. This is just what IMF prescribes as the first best in terms of attracting the most stable capital inflows. For example, just to give you one example of the kind of markets that Ukraine may need, at the moment, it's very difficult to induce domestic financial institutions in Ukraine to buy local currency hryvnia government paper. Well, why is that? That's because Ukrainian banks, private banks, rely quite a bit on foreign currency funding because of the lack of derivative markets to hedge that funding, they have to match it directly with foreign currency bonds and other foreign currency assets. If Ukraine were to develop a robust market for hedging instruments, among other things for currency risk, it will also help develop local currency bond market so that to reduce government's reliance on solely on external investors. Maybe I'll just take a pause here.
Sure. Can I a quick follow-up? Do you think there's an alternative to the IMF? Could Ukraine have survived through elections without the IMF?
I think it could probably. So there's about maybe 3 billion or so FX deposits that Ukrainian banks can put to use to refinance, also roll over Ukrainian government debt. And you know, that would only cover maybe 6 months or so of the maturing debt next year. So my answer is no. I think this is absolutely necessary to have IMF on board at this stage, also because it forces the Ukrainian authority to follow through with the structural reform, which actually in itself will ensure the more stable form of funding and investor confidence going forward.
Okay, sure. Just to be clear, we're not there yet with the IMF. Not quite. I could perhaps interrogate Vladimir around that, but I won't just yet. So, but I'll answer the question. I mean, you know, National Bank of Ukraine, I mean, I think Governor Shmoley and the team at the National Bank have excelled themselves. And one area particularly is in terms of monetary policy. I mean, you've proven when many central banks, I can think of Central Bank of Turkey that has had a torrid time because of its unorthodoxy. I mean, you guys have been brutally orthodox. I mean, and you know, I commend you enormously from that. But in terms of the mix between external pressures and how you view the world in terms of your monetary policy decision, and then the domestic challenges, could you perhaps talk about the two and their interplay between the two and your decisions that you've taken so far that, again, I would commend? Maybe others wouldn't, in terms of you live here, perhaps, but...
In terms of monetary policy, I could say that it's really... Yep. It's okay now? Oh, okay. So it's really challenge to deserve credibility as inflation targeting central bank. So actually, currently, the inflation expectations are above our targets, and fundamental inflation pressure is stubbornly high. It's you could see it on high level of core inflation, and because of that, we need to have a tight monetary policy. And if you take it in terms of like neutral policy rate, under our estimation is about 2.5% plus expectations of, let's say, market analysts about 8%. So it gives us neutral nominal interest rate at about 10-11%. So all that above is just because we need to bring inflation to the target and we're determined to do it. And of course, the situation is challenging, but usually experts see our high debt repayments next year's as a challenge, but I see that it's an opportunity because our politicians do not have a lot of space to maneuver, and actually that makes them like fans of orthodox policy. So I think it will be, there is no other way just to reform, to go on with reforms, to have credible macro policy. And on the side of the National Bank, I could say that there is high, very unpredictable environment. But the job of the central bank is to create predictability by doing its job, by making predictable policy. And that's what we are trying to build. And actually we need to distinguish by fighting these very unpredictable environment, we are making credible policy framework, which is inflation targeting. And some experts are actually mixed up with these terms like policy framework and policy action. It's not like substitutes. We need to distinguish them. Policy framework, it's the durable and consistent framework of doing things, and it consists goals, commitments, and all the stuff which is consists monetary policy itself. And there was a proposals like when the National Bank of Ukraine admitted that we are not gonna hit the inflation target this year just to increase the target for inflation. It's wrong. It's like a wrong idea, because you should not change your policy framework when you have a challenge. You need to have policy action. And actually what we have done, we are increasing our policy rate as a response to this challenge. So you need to adhere to your framework and to be consistent, and at the end you will get a result, and we will hit the target, and I think we will bring inflation to the target range next year, which is 5 plus minus 1 percentage point.
I mean, can I ask you anyway? I mean, what is the latest position with the IMF? You may not want to comment, but what is the official line of the National Bank and the government in terms of the state of play?
Yes, we're still waiting for the mission, the press release of the mission, but our view is consistent, and we think that we need to have IMF on board anyway. So it's we need to have a program for these years of very large repayments, so it will be optimal policy to minimize cost of this and to minimize risks for the next years.
Okay, apologies to put you on the spot there. I think we all know the National Bank position with respect to the IMF program. Mykhaylo, can I ask you, I mean, I see you, can I ask you your picture, your macro forecast for the year ahead, how you see Ukraine kind of developing through elections, perhaps, and out the other side? I mean, what have you got in terms of growth, inflation, is that current account fiscal position? I mean, what are your sort of assumptions for the year ahead?
Well, as you mentioned, as you organizes this kind of events, and I believe now is the best time to start planning the next year. What will be talking next year? Will we say about the previous 12 months whether it was a lost year? Whether or not it was lost year, because with the current amount of uncertainty, our base case scenario is that Ukraine gets the IMF deal done, gets all the other fundings. NBU stands rock solid as it is, or the monetary policy, which in my opinion means that the rates stay stable for the next, I don't know, 5, 6 maybe a month or so, and somewhere in the middle of 2018 there we might see a start of the cycle of rates decrease. Yes, maybe NBU has a different story, but that's how it looks. But now with the development story, with the postponements of tariffs hike, this amount of uncertainty is basically erode the base scenario to some point. There is some correlation that people who are outside the country usually sees everything in much more optimistic way, while people who actually live in the country, they always are a bit skeptical of all the improvements. So basically, our forecast for GDP is below 3%. So basically, no VRI holders will not get anything in 2021.
Really? Down?
Yeah, it's a pity. Well, but you can account for maybe capital gain if everything's going on. But on the previous panels, we've talked a lot about politics, much more than we used to on our previous year forums, and it's logical thing to do, because with those polls that nobody can actually read and understand who's going to be president and which policy will be there. And in my view, that reforms, albeit they've been everything that's been done in Ukraine is solid. They are reversible, and they can be reversible very quickly. And this is the risk number one for all the projections that we are making.
Thank you. I'm in a wonderful position that, again, I'm a buy-side guy, and I've got two sell-side analysts on the panel, and I'm their client, and they have to answer every question I ask them. So they're in the hot seat. So I've been really dying to ask this question, which is basically, as a foreigner, looking into Ukraine, I'm trying to figure out, and people don't seem to want to ask it in Ukraine for some reason, but if I look at the different politicians vying likely to be president, I mean, can you just describe the main differences in terms of policy? I mean, you're obviously reading the press and the newspapers, trying to figure out, I guess Poroshenko is clear. You'd probably think we've had a period of office, but then there are the other contenders. So you've got obviously Tymoshenko, Gritsenko, maybe Vakachuk if he decides to stand or whatever. But the other people who are likely to be in a position to challenge Poroshenko, I guess, in the presidential election. I mean, what is the real difference in terms of policy? And if any of those emerges as victorious in the presidential election, I mean, how would policy likely to change? Do you see a big difference in terms of policy with the different presidential contenders, either of you?
Well, it was for me or not?
I wasn't asking you. That's not allowed.
That's for me.
No, it's fine. Sure.
Okay. I don't know. I'll just quick remark. The P word we've been using here a lot, this populist. In my view, the populist...
Say Poroshenko there, the P word.
No, I mean, populist very often cease to be populist when they are in the government. So Greece is the good example. Well, not... It's hard to put Greece and good in one sentence, but I managed to. But yes, this is the Plan B scenario. I believe that Ukraine can survive even without IMF, even without the populist government, because it's turned out to be strong. But it's probably a B scenario.
Okay. Alexander or Alina, whichever one would like to answer.
Hello. Yeah, okay. So the question is whether...
Is there much difference in terms of economic policy between the main contenders? I mean, do you imagine a really big difference after the election?
Well, in terms of, first of all, like a quick comment on elections. I just heard it. It's also not my original thought, but I thought of one political analyst which I respect. One key peculiarity of the elections that we're going to face next year is that it's first time, for a long time, Ukraine didn't have such a situation where we would have more than 2 or 3 key, most likely, winners, say, in the presidential race, right? So currently, at least 5 people are very realistic candidates, given that we will likely to face second round based on the polls, right? Low popularity of almost equal low popularity of key candidates means that there is much wider range of opportunities, and of course wider range of political, so economic foreign policy. On foreign policy, right, most of the candidates are void, at least they speak being pro-Western, and that reflects currently the overwhelming preferences of Ukraine population. The actual foreign policy which they will deliver might diverge from that or not, but currently, apart from several more pro-Russian politicians, right, the majority sounds pro-Western. In terms of the economic policy, of course, the opposition, it's very natural for the opposition to sound populist, and we have several candidates who voice the ideas which population likes. That is increasing pensions, cancelling pension reform, cutting gas tariffs, etc. That sounds worrying to us on the sell side, but also to the investors, because this all is not compatible with the IMF cooperation, hence not compatible with Ukraine paying on its debts, and this would mean more macro volatility if that's implemented. Here I would add that it's not clear whether populist politicians remain populist when they are in power, because like being in opposition and being in power, these are two different things. Как говорят в Одессе, две большие разницы. So it seems like as majority population preferences are accounted for, it seems there is no alternative to the West. And on the previous panel, and here you asked whether there is an alternative to the IMF. Maybe this is the case that whoever comes in power, there is really no alternative to the IMF. I think there is always an alternative, but that's a big question whether you want to live in that alternative, right? So it would be much better if Ukraine preserves, if National Bank of Ukraine preserves independence and Ukraine meets its obligations. It just all other scenarios outside of the IMF are very bumpy. I think I have been answering the question for several minutes. I managed to avoid any names, not to breach any compliance rules, and be punished back to London. So I'll give the
well,
word
actually, Alexander, can I ask slightly different? I mean, the fact that perhaps the IMF program has been moved from an extended financing facility to an SBA standby arrangement. I mean, I assume that is what is going to happen, right? I mean, all the leaks suggest that, right? And it's been sold as, taking Ukraine through the election cycle and reassuring guys like me, right? I mean, that's the message, because Ukraine wants to come to market.
Yeah.
So, Alexander, should I be reassured that the fact that there's a program, there's going to be a standby arrangement? Oh, sorry, Vlad. Sorry, my mistake. Vladimir, sorry. Should I be assured by the fact there's a standby arrangement in place that whatever happens in terms of the election, the reform kind of agenda will remain more or less in place?
Well, speaking of IMF, likelihood of IMF and the whole idea of the second IMF program, just right instead of the CFF, I think is logical. I think it's actually a pretty good idea, and I think it's feasible. It makes the whole, I think, progress with the SBA feasible, rather than kind of waiting through the elections and doing the EFF afterwards. But again, speaking of the kind of correlation between the IMF and the elections, like answering the previous question, I also tried to avoid naming any specific names. But I think this idea of politics doesn't really matter in the long term. I think I do like this idea, and I think it is the case. So eventually, of course, all reforms will be done and things will be great in the long term. But to get to this point long term, I think it's basically from the market perspective, at least, and we are sell-side people, buy side, I think that's what's the most important. From the market perspective, the timing does matter, and the timing could be quite critical. So yes, we could survive. It'll probably, the country in general will be okay from the market perspective as long as SBA is around, but whoever comes on top after the elections, then of course I think it will still be important one way or another. I just wouldn't be overly complacent about that, even if the IMF will still be around, but because afterwards we will still need another program probably in 2020 going forward, right? Or maybe at least create additional framework of how to manage to deal with all these maturities going forward. This, I guess, for negotiations over yet a new program afterwards, so we could have completely different starting points. If it's going to be the current government or the people who sound like the current government or the completely different people, in the end, in the long term, I do think that we all converge to, because the country cannot kind of survive and all, there's lots of pressures and all, and in the end, we'll probably converge to this IMF type scenario. So all these reforms will be done, the national bank will be fully independent and tight and all that. But basically the question is like whether or not between now and then, this perfect shining long term, there will be a period of kind of a market wobbling. That is something where the outcome of elections is important, and where this populism message by some candidates could have an impact, I would say. In the long term, things should be fine, but not in the long term. Lots of things can happen. Yeah.
Sure. The global environment has been very challenging for emerging markets in the last 3-4 months, right? And what struck me is quite a few research houses have come out with research reports trying to identify vulnerable countries that are particularly vulnerable, right? And typically Turkey, Argentina, and it surprised me a little bit that I think Nomura, actually apologies, one of the competitors, but Nomura and I think Oxford Economics came out with reports putting Ukraine really high up in terms of vulnerability. Is that wrong? I mean, is there something they're looking at in terms of the macro sort of vulnerability data? I mean, it's open to anyone on the panel. Is there something in the data that raises red flags on Ukraine that's really not really an adequate reflection, or is that true? Is Ukraine really frontline?
Let me just maybe, I think I agree with you that there's something in the data, but these comparisons can be oversimplistic. I mean, they look at the variables like, let's look at the fiscal deficit and current account deficit, and if a country has both, they seem like a vulnerable one.
Ukraine doesn't really. I mean, its ratios, it has twin deficits, but they're not crazy twin deficits, right?
Yeah, so then one reads a bit deeper, and well, Ukraine is actually running a primary surplus, and if it continues, so, not counting interest rate payments, it has a primary surplus, which means its debt, for example, according to IIF, is actually projected to decline, not increase over time, and that sets it apart from the like of Turkey and Argentina. Also, the independence of Ukrainian central bank and its commitment to inflation targeting, and the fact that it kept monetary policy tight even through kind of a upswing in the cycle last year, is very commendable. And that's something else that sets it very much apart from Turkey or Argentina. I mean, in Argentina, half of the central bank's balance sheet was used to fund the government by issuing short-term bills to external investors. And in Turkey, the central bank also was not at all in the place to target inflation. Quite the opposite. You have the close relative of President Erdogan in charge. And so on that metric, I think Ukraine has much more solid domestic institutional foundations, and these oversimplified metrics paint a slightly distorted picture. I agree with you.
Any other takers in terms of?
Yeah, I think like somewhere where we cannot fully rely on data and where Ukraine scores very vulnerable is looking at its short-term external debt. it shows huge liabilities of the corporate sector. And then when we dig deeper, we discussed it with the National Bank. Sometimes in the service companies overstated, or there can be related party lendings or trade credits which are rolled over very easily. So those huge amounts to be repaid in the next year actually are not there. So these ratios sound too bad, but it's just because we don't have better quality statistics on the external liabilities. I agree. Something that vulnerability ratios do not account for, or not all of them, is the geopolitical situation or the military conflict. It's a low intensity, at least that's the term they use, but it provides another layer of uncertainty. And I would say, yeah, for Ukraine, I would still on our rankings, we also did a sovereign stability indicator, and Ukraine scores lower in the CEMEA group among CEMEA country peers because of the twin deficits and low growth compared to what the economy is capable of. It has been growing faster, it can do much better, and after contracting by 20%, 2 to 3% growth is just unacceptable. It can really do better. And finally, the level of dollar-denominated government debt makes the debt-to-GDP ratio very sensitive to any hryvnia fluctuations. And very recently, like the episodes of currency instability show that population reaction can exacerbate currency moves. So yes, this makes country score lower than it could be. I must say that we do time series, and it showed significant improvement. So Ukraine was the most vulnerable, but it improved the most over the recent years. But it's still the most vulnerable. So still.
May I add just quickly? First of all, every methodology is not perfect. I mean, the study you've mentioned has made a great job predicting like 60 or 70% of all currency crises, but not all of them. They predicted the currency crisis in Ukraine 2015, good job. 2016, not as a great job. Sometimes numbers are just not making perfect sense. For example, Czech Republic has 20% more chances of a currency crisis than Russia. Russia has 0% in that very study. But it doesn't mean that it's all great in Ukraine. No, one of the key factors of that study is foreign reserves to future import it is less than 3 months right now. It's 2.9, and without external funding coming anytime soon, it's just going to go down further. Back to you.
Just maybe quickly note that I think that all these metrics should be used for the purpose that they are created for, right? So, for example, if in case of Ukraine, of course, the debt sustainability metrics are clearly something which is worrying and which is important for the market and all. But if you look at the vulnerability of the general economy, I think it's much more stable at the moment. I do think that there was quite a substantial fundamental structural adjustment within the economy, and the growth is robust. It will probably stay, and it will probably survive lack of IMF program. It will probably survive many other issues. Moreover, external shocks could actually accelerate growth, like additional devaluations or whatever. So something like that. Basically, the economy is actually quite resilient, but the debt sustainability definitely is a big question mark still, given the size of it.
Sure. I mean, Volodymyr, from the central, you've negotiated kind of a careful path on this vulnerability. You kind of suggested to the government they're kind of vulnerable, I guess, to push on the IMF program a little bit. At the same time, you've been quite careful not to kind of increase concerns for people like me in terms of vulnerability. I mean, how would you respond to those kind of studies that suggest there's kind of a high vulnerability? Where are you? Where's the National Bank in terms of that?
We can actually decrease this vulnerability by doing orthodox policy. So it's the best response that we can deliver. But again, we could have like coordination with the government. We could advise them, but it's like more we're an independent institution, so you're not gonna give too much advices to the government, not to have advice back to. So it's like the separation is needed. So by doing our job, we are like reducing these vulnerabilities.
That is a brilliant central bank answer. I have huge confidence in the National Bank of Ukraine now because of that answer. Wonderful, well done. I think, Alina, you alluded to growth, and you alluded to the fact that, you know, I mean, I think it's interesting to look at growth performance this year, and I think there was a revision up of the second quarter data to 3.8. And that's an achievement. You know, growth is definitely an achievement. And I think last year we were here, we had this debate about what's a good growth number for Ukraine and should we celebrate 3.8. And that's a big debate. I don't particularly want to have that. But I want to look for the year ahead, and probably for the whole panel, is, you know, from a macro perspective, I mean, for whoever wins the presidential elections and obviously then the parliamentary elections, you know, what's the one kind of reform policy that perhaps hasn't been done or hasn't been delivered well enough so far that could actually make a meaningful difference to growth, that could take, you know, 3.8 to 5? You know, what is it that's missing? I mean, what should be the big reform priority for the next administration?
I'll start from the very basics. To grow, the country needs one of the three, or maybe all three factors: either growth in population, or growth in investment, or growth in productivity. Total factor productivity is a low model. Unfortunately, with the first one, there is a challenge. The pickup in the migration, and that's the migration of the population in its most productive population, maybe like more educated. In terms of investment, currently Ukraine investment to GDP ratio is below 20%, and that has to be much higher compared to its country peers. It's pretty low. And productivity, again, the productivity statistics shows also that there was it's still positive growth, but very low. So in terms of population, it's hard to turn around things very quickly. So you really need to boost investment and to boost productivity. For that, you need help from everywhere, from the domestic economy and from abroad. I mean, sub $2 billion of foreign direct investment is extremely low. And it highlights that there are some serious issues which make investors question, question themselves whether I want to be here. And so the government does there is a lot of focus on that to attract foreign direct investment, and hopefully, the quantity of efforts will translate into quality of the FDIs coming sooner or later. But yeah, both for domestic and for foreign investors, the stability is needed. And for the business environment, just recently, sorry, I'm referring to Dragon Capital, but they sent this survey. I think they did it together with Kyiv School of Economics. But it seems that the problem number one still remains to be corruption. It's something that everyone talks about, something that hasn't been done. So this circle hasn't been closed. The panel is, what will we see in 1 year? How Ukraine will look in a year ahead. So next year, the same amount, the same event, we will see whether anti-corruption court is created finally, and whether it works. And that's the very first step, right? It's the very first step in the many following needed actions to send some confidence, to improve legal environment, judicial system, and so on. Yeah, and to send a positive message which would make investors more confident in the economy.
I guess you had a question. The question states that the reforms which hasn't been started yet, right? So, I mean, I completely agree that the corruption is clearly very important, but there is definitely a lot of work been done, and a large part of them actually has been done. And we just need to implement the whole thing, right? So that's the question, which is of course important, but something so from what has not been touched upon, I guess, is the one big thing is the land reform, and that could potentially be a game changer for the whole, I guess, macroeconomic discussion from the debt sustainability discussion, because that puts a price tag on a big strategic asset, which a lot government holds still, and a lot of private individuals hold. It could attract significant FDI. Right on the spot, actually, most of the FDI to Ukraine are still directed to the land, to the agricultural sector. So I guess that's something what needs to be addressed, and where the positive surprise could come from.
Perfect.
I think I just want to second what Vladimir just said. To make it less abstract, the potential effects of land reform could be seen in over the last couple of years. If you look at which bank is ranked the best bank in Ukraine in Euromoney rankings, it's a
The National Bank of Ukraine.
private bank, okay, of the private institutions. I mean, it's a sub of foreign bank, okay, Austrian bank. What did they do? In 2015, during the time of extreme uncertainty, they still got some capital from EBRD and bet huge on Ukrainian agricultural sector. In 2016, they were delivering very good profits. 2017, of course, they do more things than just agriculture, but it just shows you that they bet on Ukrainian agricultural sector and it paid off hugely. So I wish Ukrainian reform agenda progresses in that same direction, because we can see the potential.
Sure. Volodymyr, can I ask you, again, you know, the National Bank have done many fantastic things in 4 years. I could list a long list of achievements, but, you know, what haven't you done yet that, you know, you think this is something really important and we really want to deliver that in the 12 months ahead? Or is there anything particularly that stands out that you know you could do that would really be game-changing or would make a big difference?
I think there is always room for improvement, but we are on the right path. And I think because as you mentioned, GDP growth this year, it's actually not too high, because Ukraine could have a higher growth rates. But from the other point of view, it's under our estimates, it's somewhat above the potential. So the problem is the potential GDP is too low. And what could be done about it, it's all these reforms that my colleagues mentioned. It's like judiciary system, rule of law, land reform. All this stuff could actually increase the potential GDP, and the economy of Ukraine could grow with higher rate, but at the same time not producing additional inflation, and we will not be so tight on monetary policy if all reforms will be done.
Can I ask you a very specific question? I mean, I think a couple of weeks ago there was a Bloomberg article about the National Bank no longer being kind of the lender of last resort for the government. I mean, not willing to fund the deficit. I mean, that was great from my perspective. From a foreign investor, this is a really standout change of direction from the central bank, going back 20 years, right? Is that reality? I mean, that was a very forthright statement. I mean, is that fact? I mean,
actually, it's very strong commitment from the board and supported by the Council of the NBU that there will be no fiscal dominance anymore, and the portfolio of government bonds will not increase, and it will decrease as the debt is paid off. So yes, there is strong commitment not to repeat this wrong practice of fiscal dominance.
Right, so I mean, statement to the government: go to the IMF or go to the market. Don't come knocking at the National Bank's door. It's locked. Okay, wonderful. We've got a bit of time for questions. So, any burning questions out there? Want to grill our wonderful panel?
So, if I may get back to To what Vladyslav said about the original thing and the foreign exchange denominated debt. So you gave some recommendation of how to get rid of this debt. You say that it's better to develop an internal securities market or derivatives market, and probably this is discussed in the other room right now. But from your point of view, what can be done, what actions can be done by the central bank to tackle this problem? Because the development of the securities market can take a lot of time, so it could last for years, but the FX debt is usually the reason of any crisis in Ukraine. So there is a legacy from the past. It could last for very long. So are there any actions that can be done, especially by the central bank?
Difficult one. I mean, I think central bank is already doing quite a lot at the moment. Credibility, consolidated government credibility is one of the main reasons why it's difficult for foreign investors to commit more to buying local currency debt, and why it's difficult for country to issue long-term debt, which would be ideal, because what you want is not the kind of hedge funds who are betting on carry and they're not there anymore when carry deteriorates. What you want is foreign institutional investors, domestic institutional investors, diversifying, among other things, into Ukrainian government debt for the purposes of risk diversification, not so much yield chasing. I think, I'm not sure what the central bank can do specifically, but it really comes down to developing domestic institutional investor base and domestic capital markets infrastructure and regulation. To the extent that the central bank is involved in those areas, I would say that that's kind of the direction.
Perfect. Anything else from the audience?
Yes, question about the interest rates policy, because I would like just to start again from the remark of Alina about the weak level of investment and the very limited progress in terms of productivity. What are, according to the different panelists, the root causes of inflation, and how the current high interest rates are able to tackle these root causes? Because one of the causes seems to be related to the wage increases, which could be compensated by higher gain of productivity, but this required investment, which is not favored by high interest rates. So I would like to have more comments about that.
Actually, inflation is always a monetary phenomenon. So you just can deal with inflation by having higher interest rate. And what is the strategy is we will not have cheap loans if we will not bring inflation down and have it stable. So the strategy is to have stable inflation that will reduce the inflation risk, and that will allow to have more productivity in the economy. But it does not work other way. So we could not artificially lower the interest rate. At the same time, it will destabilize expectations. It will cause even higher interest rates. So there is no other ability to actually do monetary policy in such environment. Yeah.
Anyone else on the panel want to take that one?
I just want to say that the experience of other countries, like for example Russia, right? Just 5-10 years ago, there was a huge debate, and there were great experts arguing that inflation in Russia is not monetary; it's set by fiscal, it's set by many other things, food, harvest, which is nothing to do with the interest rates. But in the end, it's all monetary, one way or another. I'm just trying to this orthodox policy is the only way how to address the issue, and some other countries managed to do it, even though they did have fiscal dominance, they did have other factors, they did have, like for example, high dependence on oil prices, like Russia, for example, right? But then inflation is 3.1%, and which is now perceived as high, actually.
I think it's very easy to blame the central bank with still high inflation with such huge interest rates, but it's a monetary phenomenon. It also depends on the level of competition in the economy. The higher the competition is, the less pricing power the less pricing power there is in every sector, and the more the retailers, producers will try to bring their costs down to gain the share on the market, right? So there's some help from the government, some structural reforms needed in that area to improve competition. Help from the Ministry of Finance is needed. If you have expansionary fiscal policy, your rates can be, 25%, maybe 30%. It's very hard. Then I think the National Bank did a significant job building transmission mechanism and what it can do, right? It can affect saving preferences, controlling or affecting saving and spending behavior of households, of corporates, so in a way, every single institution has to do its job to achieve the goal, and National Bank on its own, without cooperation with others, would have to keep rates even higher than it would otherwise if we had definitely stability of the exchange rate, households' expectations of stable exchange rates, say through election period, and also if it would be confident in cooperation from the side of the Ministry of Finance and the say prudence of the fiscal policy. That's it.
Great. Any more questions of the audience? Maybe just one at the end, back there.
So just very quickly, just one example, actually, additional to Russia. Actually, in Africa, this is Zimbabwe, right, case, I think. It is my favorite case. Again, huge number of people arguing that inflation there is nothing to do with monetary, fiscal, and things like that. Inflation was in well, I guess what it was like in billions percentage. And then something happened, then they just canceled the national currency and inflation just disappeared. But nothing else changed, right, except for that. So meaning that inflation is indeed just monetary, and it has to be dealt with exactly the monetary mechanisms. The transmission mechanisms could differ, but they still exist.
Okay, thanks. My name is Alexander Luberev, Metinvest, the biggest exporter of this country. So just the question to you guys. I mean, you're looking very positively on everything once again. And my question here is very straightforward. Let's imagine tomorrow we have an IMF. Let's imagine that everything is good, there are elections in this country in the proper manner, and there are no populists coming to the power. So do you think the BB minus, BB flat is achievable for this country in the nearby, let's say, if not 12 months, but 18 months? Just assumption.
I think nothing is impossible, frankly. And we do think that continued IMF cooperation is one of the key factors for a rating improvement, specifically where you still have C handle. So yes, and definitely the rating upgrade story is definitely out there with IMF.
Did you say BB though?
Nothing is impossible. Maybe not in the next year or so, but in the longer term, where everything is perfect, why not?
Just to remind you, a few years ago, Ukraine adopted Strategy 2020, and the goal was for that year that we will have investment grade, so it's triple B. But
okay. Actually, I'm just sneaking one more question for myself, and again, it's kind of aimed at the central bank, but I'm not going to ask you the question. I'm going to ask the other kind of conspirators that I've got on the panel. And I guess it's about central bank independence, right? Because basically, the National Bank has worked really hard to, really fought really hard to generate this level of independence that I think we'd all acclaim now. I mean, but how easy is that? Could that be lost through the election cycle? I mean, are you confident I mean, how assured should we be about this independence? I mean, if we see a political change, I mean, how easy is it to erode this really hard-won independence? I mean, are you assured by the management of the central bank at the moment that they can fight their way through a new set of politicians?
Okay, technically it's easy. The president submits the bill to the Rada, and if he or she gets enough approval, if the Rada, the new governor is installed of NBU, and it would depend on the personality of that very governor. It would be hard to do, consider the dependence on the IMF and external funding, but I wouldn't say it's impossible.
Any other takers? No. Okay. Wonderful. I think we've run out of time, so I'd just like you to thank our wonderful panel with a warm hand of applause. Thank you very much. Enjoy your dinner.